Hi there, it's Casey, and welcome to the weekly money collection through our options premium. And so I'm going to go ahead and share with you what happened this week and also what I'm going to do now. So hopefully you've been following along, but let's get started. So right now I want to take a look at AMC. And so you can see today we are currently up a little bit. We've got a pin bar here and we're responding to this support level. So there's a couple levels we want to really look at. I'm going to add this one right here. And you see we're just holding here. So if we can hold this one and then pop up, we could be in good shape and possibly build a base here and recover. So I've been collecting premium on this. I've collected $206. Let's take a look at my spreadsheet here to show you what I've collected. I collected $206 on last Friday's video. I collected 50, and then during the middle of the week I sold it and sold it again for 57. So total was about $57 in premium that I collected this week. Now, what that means, though, is that I'm still down $411 because the stock has dropped. My first purchase of AMC was $23.46, and then I purchased again at $18.06, and now we're trading just over $15. So I'm down another $3 from last week's purchase. And so when we do our credit, we want to make sure that we're not going to give up our profit on this trade. So we currently are trading at $14.96, and there's a couple levels we want to look at for our options that we want to sell. So right here is the daily pin bar and support, which is right at 1845. So I want to be above that, and I'm going to go to $19. Okay, we're going to go to $19. So we're going to take a look and see what our options are. Options at $19 for next week. It's a 7 days out. And so 19 is only 23 cents. Oh, it just went up for 23 cents, 24 cents. The good news is we're buying it on a spike. Let's take a look. When you sell a premium on a spike, it gives you a better price. So that's good news for us, is that it's spiking up, but if it goes up above 19, we'll lose out on that. So let's take a look and just go back to the options, and we're going to go ahead and sell that for $24 in credit. Oh, wrong one. We're going to sell it. And actually it's $25. So we're going to sell it for $25. We're going to go ahead and get the money here. All right, awesome. So now we got $25. So let's add that to our spreadsheet. We're going to add the 25. So I'm just going to do a quick copy and paste here. And I'm going to do it for 25.25. And then I'm going to put my order here at about 0.05 just to make sure I sell it. And now we want to make sure that we add up here. We're going to add these numbers. Right. And so the total collected now is at $226. So that's where we're at. And I have some premium added to the pile. So right now the average price is $22.88. So if price goes up to 19 and I close my shares, if it goes up to 19 this week, I'll make $12 on these, but on these 100 shares, I'll lose money. So I want to be very careful to make sure that I'm watching this option so we don't get called away at 19, if that makes sense. So that's what I'm going to do right now. And then now we got to look at what new option, what stock do I want to buy with this credit? Now, before I decide what I'm going to buy, I do want to look at this position that we've been watching here with the ERF. And last week we had watched this level and we were saying if it closed below here, we were going to get out. All right, so it's still above, and you can see it did drop below, but didn't close. We had a spike, and then now we're holding. So I'm still going to hold this. I've got a $13 call up here that will expire in April. And so we're still going to hold it, and I'm thinking that we might be able to hold this level. But again, if this level breaks, I'm out. And I'll be watching that, and I'll keep you guys updated. All right, now another one I'm looking at is ZIM. We're looking at ZIM. And ZIM's pretty nice because if we look at this stock, it has just been on a tear, right? And that's always a good thing. It was an IPO here at last year and at $11, and now it's at 64, and it's done nothing but go up. We got a nice little trend line here, and it's just breaking this level. It bounced, broke. We got a trend channel moving up. So let's take a look at a possible trade here. The top of this channel. It might go up here, right? And so how long would it take to get up there? The thing we got to realize is this is in a bear market, and so it's been performing really well. But I'm thinking $80. So let's take a look at options and see what the price of options are for around $80. So if we go at 80, if it gets up to 80, that would be $1.35, and it's about that's about a $15 away. And so if we get up to 85, we could make a nice double our money or even triple our money on this one if we could get that continued movement. So it's a pretty nice setup. Let's take a look at one more option here. If we go out a little further, if we go out, it's $1.75. It gives us a little more time to get there, but it's a little more pricey. And so that's something we want to consider. When you go closer, you save yourself some money. Let's take a look at what February's 85 costs. So the February 85 is only 20 cents. And so if we think that it's going to, when does that expire? That expires in 21 days. So if we think it's going to pop right away, we could try to get in. It makes it a little more risky, but you save yourself some money. So I'm going to just jump in, and because we didn't make a lot of credit on this one, so it's $20 to buy. I'm going to jump in and get two of them, and we're going to buy two of them, and that takes it up to 40. And so we're just going to buy two of these, two of ZIM at 40. Okay, and so I'm not going to hold it for too long. It's only 21 days, so I'm going to be watching it. If it can get up maybe even to 40 cents, we'll double our money, and we'll get out. I'll be putting in an order to sell this when it gets up to 40 cents. So that would be pretty good. But again, if we lose it, that's not the end of the world because we're still making premiums every single week. And so the good news is we've just included, we're done with the month of January. This will be the last month. And if we look at our earnings, we made $226. So $226 in the month is pretty good. I mean, it's not bad side money. 226 times 12 is $2,702, which would be 100% ROI on our initial investment of $2,500. So anytime you can get 100% ROI, you double your money. That's a good thing. So by next year at this time, if we keep going on the pace that we're going to be at $2,700. And that means we should be earning double our money and then continuing doubling. So I'm just going to keep updating it as time goes on. But I did have a little bit of extra cash flow in here. And so what I was going to do was buy some more AMC stock to help lower our price, our entry price, so that we don't have to get out quite as low as what we don't have to wait for it to get all the way up to our initial price at $22.88 to get out, right? So if I buy more shares, it'll lower the price. So I'm going to go ahead and put an order in here. We're going to buy $100 worth. So you click this part and we go to quantity. We're going to buy 100, and we're going to just do a market order at $100 at $14.78, and we're going to buy the shares at $14.79. So there we go. It's amount roughly 88 because we're only going to get 6 shares. All right, well, that dropped our average cost to $22.47, so now we don't have to quite get as much out, plus the $226 we've collected in premium. We did $226 in premium this month. Let's see if we can beat that for the month of February and beat $226. If we can slowly increase our premium every month, we're on the right path. All right, well, thanks. We'll see you in the next video.